I spend my time talking about why Bitcoin is important. And so obviously I spend a lot of time on the economic side, the philosophy side, the politics side. And it seems like Austrian economics kind of encompasses most of that.
Focus a little bit more on this idea that no, you need to save and then be able to produce more, and then you can consume more.
Central banks cause boom and bust cycles. But it seems that the common belief today is that it's free market capitalism that causes booms and bust cycles.
A lot of entrepreneurs get given the wrong signal in some sense. It's like the market's signals have been messed with.
Yep.
And in doing so, all these entrepreneurs run into a certain area. And for the last 40 or 50 years or whatever, it's been a lot of that has been property, right? Think how many people are property entrepreneurs. Well,
they're creating this artificial demand, which forces everybody or entices everyone into certain sectors, which causes them to get way bigger and then crash, which leads to bigger booms and busts. Is that kind of what you're saying?
Look, the big businesses are in bed with the government. And in some sense, Austrians agree with that because they're saying what we want really is less government intervention. But really what happens in practice nowadays is more like big business will lobby with the government and the incentives just kind of work for them to try to set up a system that cocoons themselves from outside competition.
A bill that Amazon had put forth saying that in the United States, if you were selling products online, you didn't have to collect sales tax to every single jurisdiction that you were selling to. There'd be no way to do that. And so they put this bill, and it was like the Fair Tax Collection Act or something like that. And of course, Amazon is the one that pushed it, and they said everyone had to start collecting tax. But of course, the small guy, there's no way they could do that.
I view Bitcoin as ultimately it is a technology that tips the scales in the favor of the individual. It's kind of like the printing press came out and it changed the balance of the power. And I think Bitcoin is just like that. It's going to tip the balance more towards individuals and families and communities versus governments.
I spent my Bitcoin. I can go get more Bitcoin, right? I can go get more gold. I can go get more whatever, but I can't go back and get more time. So it's like the ultimate scarcity. And if you look at, and so I guess if you change the economic view and like look at people, most people today probably don't value their time, right? They squander their time, waste their time. They don't even know where their time went. They're like, dude, where'd my whole day go? All right, everyone. Welcome to another episode of the Market Disruptors show. And today I'm joined by Stephan Livera. He is the host of the Stephan Livera podcast, and he's also the co-founder of Ministry of Nodes. And we're going to dive into that today. I'm excited to have you on, Stephan. Thanks so much for joining.
Well, thanks for inviting me, Mark.
Yeah, good. So, so I've been listening to your stuff for quite a while, and man, you put out so much good content for so long. So I'm happy to have you on and dive into kind of this stuff. And I want to start. Well, I guess let's start in the beginning. And as I said, I've been following you for a long time. A lot of people maybe don't know. So just give us a little bit of a background on what you've been doing and what you're working on.
Yeah, sure. So I am mostly known as a Bitcoin podcaster. So I interview many of the leading lights in the Bitcoin world and also Austrian economics. And so I take an approach where I try to interview people who are quite technical themselves, but then try to break that down for people at a level that, let's say, the intelligent layman can understand. And obviously it's a Bitcoin focused show, but I try to work in certain economic aspects of it as well, because I think you can't understand Bitcoin without meshing a good understanding of the economics and the technology together. And so my show is one of the well-known Bitcoin specific shows in the space. And I think many people who are themselves Bitcoin builders and so on are listeners as well of the show. So that's probably the main thing I'm known for. And then the other project I have is Ministry of Nodes, which is, think of it like if the podcast is for interviews with leading people in the space, Ministry of Nodes is me and my co-founder Katan. It's our effort to try to put some of these things into practice for people and give them guides and exact step by step. Here's what you do. Here's how you do it. Here's how you take back your financial self-sovereignty.
Yeah, great. And we definitely need that. And so I want to dive into that some. But before we do, it seems like, as you said, right, you talked about some Austrian econ, and it seemed like you were really focused on that, and it's kind of shifted a little bit. But I want to dive into that first. So I know you've talked a lot about Austrian economics. And so, I spend my time talking about why Bitcoin is important. And so obviously I spend a lot of time on the economic side, the philosophy side, the politics side. And it seems like Austrian economics kind of encompasses most of that. So tell me, I guess, how you see that economic philosophy Hey, just a real quick interruption to let you know that this video is brought to you ad-free by BlockFi. Now, they're giving you the ability to hodl your Bitcoin and your crypto as it goes up in value, and at the same time, you can earn high-yielding interest on it. So you can basically hold it for all the upside potential, and then you can make cash flow off of it at the exact same time. Now, opening an account super fast, super simple, and they've offered to give me up to $250 for every sign-up, but I told them, you know what, let's give it back to you. So you can now go and you can get the $250 whenever you set up your account. And all you have to do is just check the link in the description for details, set up an account, super quick and easy, and earn up to $250, brought to you by BlockFi. So check them out. As opposed to kind of what we have now and why that system you think might be better.
Right. So I come from that perspective in terms of an Austrian economic analysis of the world, and I guess it informs my worldview, and that is part of, I inject that into my interviews and people I interview. So in terms of what's different about the Austrian perspective versus, let's say, the current mainstream perspective, is more
Whatever it
like
is, right?
Austrians see no role for central banking, as in no productive role for central banking. It's seen as like a political outgrowth of the state, and that it can cause all kinds of problems in the market, which it's referred to as the boom bust cycle, or also known as Austrian business cycle theory. So Austrian economists tend to be, they are more free market. They believe in free market capitalism. They believe, and they talk more about this idea of bottom up, spontaneous order, right? And if we were going to get a bit more technical, it's more like it's really looking specifically at the choices and actions that humans make and how can you deduce them. So the method specifically is kind of more like, think of it more like logically deducing certain truths and understanding and applying those into the real world, and trying to use that to understand a little bit better what's going on. Now, in practice, what does that mean? It means anti-central bank, anti-fiat money, generally pro-free market, generally looking for ways to help articulate and explain why we should have free trade. We should encourage the productivity and production through accumulation of capital, as opposed to maybe a more Keynesian point of view, which is more like consumption first. Whereas an Austrian might tend to focus a little bit more on this idea that, no, you need to save and then be able to produce more, and then you can consume more. So I guess that hopefully that helps.
Yeah, you said something that probably put a whole bunch of people on their head, and you kind of came straight out and you said no central banks, and then you said something that even went a little bit further that probably really threw people off, and you said that central banks cause boom and bust cycles, but it seems that the common belief today is that it's free market capitalism that causes booms and bust cycles. So do you want to explain that?
Yeah, sure. That's a great question. And so I think the Austrians, when you read them, think of it like this. We should expect to see, just in normal capitalism, some businesses growing and some failing, just as normal as you would expect. That's just normal. But why is it that we see a cluster of errors in a certain area over time? And so historically, whether that's the dot-com bubble or whether it's, housing bubble or etc., why is it that we see that? And it's actually that there's a reason, there's an underlying cause for that. Now, if you listen to the mainstream media, they might say something like, "Oh, see, it's just, it just comes and goes. It's like seasons. It's just going to be with us for all of time, and we just have to deal with it. And the central bank needs to step in and manage it, and they need to try to have stable prices and look after the employment rate and these kinds of things." Where, from an Austrian perspective, it's to try and look back and wait a minute, what's the cause of that? Try and trace back what is the underlying cause of this. And so in the Austrian view, it's more like, hold on, it's actually credit expansion that drives all of this stuff. So put simply, government interventions such as the existence of the central bank, the lender of last resort, some of these things, they push the interest rate, they artificially depress it below what it would be in a true free market. And so in that sense, it causes people to get the wrong signal, right? So prices are like a signal. They're like an information. They're like saying, hey, come here, use this product, use these resources because there's a profit opportunity. And if there's a profit opportunity, you're being productive for the rest of society. That's kind of one way to think of it. And so central banking is viewed as like a government intervention into capitalism rather than being a function of capitalism. And so in that view, it's more like central banking helps enable government to kind of take more command over the economy. And so it essentially drives this boom and bust cycle because a lot of entrepreneurs get given the wrong signal in some sense. It's like the market's signals have been messed with.
Yep.
And in doing so, all these entrepreneurs run into a certain area. And for the last 40 or 50 years or whatever, it's been a lot of that has been property, right? Think how many people are property entrepreneurs.
Mm-hmm.
Well, it's not clear that that is actually like that is what would have happened if we were living under a fully free market with zero government central bank.
Yep.
And so I think that is essentially coming around to this idea that if it weren't for government central banking, we would not see this boom and bust cycle that we have seen every 6 or 7 years historically.
Yeah. Yeah, I think, part of it, these are complex subjects to understand because you have to kind of have disciplines in several areas. And so you mentioned earlier, like, human action. And so like, you kind of have to understand like human motivation and human action in that human intent, because as you said, it is a little bit like cycles, right? Cycles do come and go. I love vanilla ice cream and all of a sudden I want chocolate. I don't know why I want chocolate. I just do. And so we're going to want different things. And so there are going to be booms and busts. And that's just natural. Some businesses start and some fail. But I think to your point, they're creating this artificial demand, which forces everybody or entices everyone into certain sectors, which causes them to get way bigger and then crash, which leads to bigger booms and busts. Is that kind of what you're saying?
Yes, that's a great way to put it.
Yeah. And it's complex, but at the same time, it seems like the Fed tries to make it so complex that we don't understand and that we have to depend on them, when really, as you said, if you break it down into those principles, it's actually pretty easy to understand. It seems like, what about as an economic principle, it seems like the Fed also is a way that maybe the elite use it to transfer wealth as opposed and control, as opposed to really trying to free the system. Whereas as Austrian kind of, I guess, as you said, leads to more free market. I mean, is there a big difference between like free and captured controlled in those two systems?
Absolutely. So the way most Austrian economists would view what's gone on over this last century or so is essentially that the state keeps expanding, and that what happens, and this is where it gets a little bit more confusing, because when people look at what we've had, they say, oh, look, the big businesses are in bed with the government.
Mm-hmm.
And in some sense, Austrians agree with that, because they're saying what we want really is less government intervention. But really what happens in practice nowadays is more like big business will lobby with the government, and the incentives just kind of work for them to try to set up a system that cocoons themselves from outside competition. And so even things like, the Federal Reserve and so on, it often ends up being that the existing big players, once they've gotten big, they try to lobby the government, and they will try to say, hey, and they might couch it in very noble sounding language. They might say like, oh, look, it would be very unsafe to not have regulation on this industry. So let's have regulation on this industry. But here's what we're going to do. We're going to make the regulation kind of fit just around me and make a nice little cocoon around me so that I can entrench myself against new competitors.
Yeah.
And in some sense, that happens in many industries, and banking is just one of them.
Yeah. Yeah. It seems like regulations are always meant to kind of entrench those positions. I've seen it firsthand. I was really involved in the early days of the internet, and I remember, I forget what it was called now. All these bills, they're bad, but they have these good sounding names. And it was a bill that Amazon had put forth saying that in the United States, if you were selling products online, you didn't have to collect sales tax to every single jurisdiction that you were selling to. There'd be no way to do that. And so they put this bill, and it was like the Fair Tax Collection Act or something like that. And of course, Amazon is the one that pushed it. And they said everyone had to start collecting tax. But of course, the small guy, there's no way they could do that. Only Amazon could do that. And so we see that kind of thing happen all the time. But it seems like it seems like we've moved now to where everybody wants to have like this free, or I should say this risk-free, this safe society where everybody succeeds. And Austrian is kind of like it's free, but it's not safe. And so I think it looks like you kind of have to have this trade-offs. And it seems like more people are opting for safety over freedom at this point. Is that what you're seeing?
Absolutely. And I'm certainly in the camp where, I guess, put simply, yeah, I value freedom over safetyism, if you will. Now, I think the irony is, though, is that those people who were saying safety, safetyism people are almost in some way, without realizing, they are jeopardizing their long-term safety anyway.
Yeah.
Right. Whereas I think if we were to have that society that prioritized freedom, and in this case, more specifically, private property rights and our rights, I think we would actually, in some kind of counterintuitive way, we would actually make society more prosperous and more safe anyway. It's just that what happens is government becomes this kind of big bureaucracy. It starts to impose one size fits all rules on everyone. It becomes onerous. It becomes high tax. And so those of us who want freedom, and it's a weird thing because it's almost like the views that maybe you and I are talking about now, they might be perhaps in the minority now, but
Yeah.
say 100 years ago, they probably weren't in that much of a minority. It's
Yeah.
just that over time, it just the values, the culture of society, whether in the US or here in Australia or elsewhere around the world, it's like the values have eroded in some way, and so it's it's a tricky situation. But I think there is kind of like that maybe there is a bit of a pendulum sort of swing aspect to this, and I think to
Yeah.
some extent we're seeing the pendulum kind of go to the one end, and I think now we're gonna eventually it'll come back the other way.
There's a book called The Pendulum. It's a great book. I don't know if you were just saying that or if you've heard of the book.
I
Um,
haven't, no.
but it basically talks about it's called The Pendulum, and it talks about these 40-year swings where we go from a we cycle, so that's we collectivism, globalism, and then it swings to a me cycle, which is individualism, decentralization. And so every 40 years it goes, so it's an 80-year cycle back and forth. And the last time when we shifted from the decentralized, the me, was at the end of like World War II, which is when the UN got founded, the EU first started getting founded, all those things. And right now, I think 2021 is the peak of that we cycle. And then it starts to shift back to a me, individualism, decentralization cycle. And in the book, they trace it back thousands of years. It's pretty interesting. But what I was going to say is, like, when you talked about Austrian econ, you were talking about how it really breaks things down to their most basic, right? So there's like natural laws. And it seems like we kind of know this because if we look at nature, we can see. So if we look at animals, for example, even if you go to the state parks in the US, they might have a sign that says, don't feed the animals, because the animals become dependent on the food and they can't go find food on their own, right? And so like we know this in some instance, right? And so I'm just curious, like, if you have what your thoughts are on this, because I look at it like, let's say if you're a lion, right? Like you're a free lion and you're in the jungle and you have to fight for your territory all the time and you may starve and it's a rough life, but you're free. Or you could be a lion in a cage and get your antibiotics and get your one meal a day, but you're in a cage. But the problem is, once you're in that cage for years or a generation, you don't really go back to the wild. And so it doesn't seem like it's going to be that easy to just like switch it back off. Like, I mean, have you thought about that? Like, how do we transition out of this?
It's a hard
Knows,
question, to
right?
be honest. I think it's one of those things where you have to lead by example. And so I think to some extent, Bitcoin people are trying to lead by that example and say, no, let's take responsibility. We're going to take
Yeah.
responsibility for ourselves. We're going to try to build our communities and give people the freedom back and encourage them to take their power back where they can, and go
Yeah.
and live free where you can.
Little by
It's
little.
Yeah, exactly. And I think to some extent, I view Bitcoin as ultimately it is a technology that tips the scales in the favor of the individual.
Yeah.
It's kind of like the printing press came out and it changed the balance of the power. And
Yeah.
I think Bitcoin is just like that. It's going to tip the balance more towards individuals and families and communities
Yeah.
versus governments. And
Yeah.
so I think what that like, because I think of it like, you know how people talk about that idea of politics is downstream of culture?
Hmm.
I think upstream of culture is economics. And if we have bad, weak or sound, not fiat money, easy money that's easy to create, that causes the cultural degeneration. And then so I think the next swing back is the hard money direction. So I think it's kind of like you change the economics, you change the culture, and then you change politics. And I
Hmm.
think that
That's good.
is sort of the cycle that we're coming back into, as you mentioned.
Yeah, that's real good. I actually I love that. I'm sure you've seen the same, right? We've seen however many people coming into Bitcoin, and when they change their time preference, it starts to change their whole life. And you see it over and over. I say it myself, other people, that it's changed their entire thought process, the way they view the world, the way they spend their money, save their money, work, all these things have changed. And so it really does start with that economic view, I guess.
Exactly. Yeah, I think it. As my friend Safety says, the most important trades are the ones that you make with your future self, and
Yeah.
you have to start thinking more about your future, and ideally, when you have a family, your children and your grandchildren and your legacy and those kinds of things. And many
Mhm.
people, when they come into the Bitcoin world, they start really thinking more about these kind of future opportunity costs because they weren't all that kind of saving type who thought about the future, but Bitcoin kind of forced that cost onto them because now it made it more apparent that, hey, if I spend these Bitcoins now,
Yeah.
I'm missing out on huge gains in the future. So now I need to start really thinking about that and maybe.
Hey, just another quick interruption to let you know that this video is brought to you ad-free by BlockFi. Now, they allow you to hodl onto your Bitcoin and your other cryptos for all the potential upside, and at the same time, you can earn high-yielding interest on it. So it basically cash flows. Now, with BlockFi, you can earn up to 8.6% interest. You can also borrow against your crypto as well. It's super fast, it's super easy to set up an account, and right now, you can get up to $250 when you set up your account. Check the link in the description that I have for details in order to claim that $250 because BlockFi is the future of finance. Just check the link in the description for all the details of how to claim your $250 today.
Eating more healthily, working out, and doing these kinds of things to really, we want to play long-term games with long-term people.
Yeah. I was listening to Safe today, and he was talking about how how everything is built on economic principles. That's kind of exactly what you're saying. And and it's all based off of scarcity. And the ultimate economic principle, the ultimate asset, the ultimate scarcity is time, because time is the only thing we can't go get more of. So I spent my Bitcoin. I can go get more Bitcoin, right? I can go get more gold. I can go get more whatever, but I can't go back and get more time. So it's like the ultimate scarcity. And if you look at, and so I guess if you change the economic view and like look at people, most people today probably don't value their time, right? They squander their time, waste their time. They don't even know where their time went. They're like, dude, where'd my whole day go? Um,
Exactly.
all right, where did my month go or whatever, right? And so like, yeah, you start to change that economic, it changes the worldview. I like that. I hadn't really thought of it that way. Um, yeah, good point. So I'm curious, you used to talk a lot about Austrian economics. I'm curious, did you come into Austrian economics after Bitcoin? Did Bitcoin change your worldview into that, or you had it before?
I was already into it. So the thing for me is I was maybe 14 or 15 and I was like on IRC and this guy kept linking to Mises daily articles, right? I was on some politics channel and that was my first exposure to Austrian economics. And that
Yeah.
from that was how I went down the Austrian economics rabbit hole. And then later in my life, obviously Bitcoin came up and I was like, wow, this is amazing. This is it. This is the thing. This is, it's not everything we need, but it's probably the most important technology for creating more freedom. So those of us who are more liberty minded, it's a very important technology. So for me, I was already into Austrian economics. I was already anti-central banking. And that for me was what helped me see so much value in Bitcoin. And
Yeah.
so funnily enough, I have a lot of listeners who came in from the Bitcoin side, and then because of listening to me and reading Safety and some of the other people and reading the work of other people in the space, they also went down the Austrian rabbit hole. So I see it as part of my role is to help educate my listeners both on Bitcoin technology but also Austrian economics. So sometimes it's kind of the balance shifts a little bit, and I kind of end up doing more Bitcoin tech stuff versus kind of economic and macro and history elements of it. But I try to, it's a bit of a balance.
Yeah.
But certainly it's, some people come in Bitcoin first and other people were more Austrian and libertarian first.
Yeah. So let's jump into that a little bit, because I spend all my time focusing on the big picture, the why stuff. And I know we had a ton of people that have come into the space recently with the price shooting higher, the number go up technology, as we say. And so I'm getting flooded with questions on, more technical in nature. So how to store it, where to store it, how to secure it, all those types of things. So I guess where would the average person start? Like, how do you think of, let's start with storage first. So
Mhm.
somebody wants to come in and they buy Bitcoin, and it's on the exchange they bought it, and they could either leave it there or they could take it off and put it onto some sort of a wallet, hot wallet, hardware wallet. All of those things have trade-offs and risks associated with them. So how should the average person think through that and try to decide how they want to move forward?
Yeah, great question. So, what I would say is for many people, they just start on an exchange, right? And fine. What I would say is start small. A lot of people get very, what's the word? It's like analysis paralysis, right? They're just like, oh, I don't even know where to start. I'm just going to leave it there. It's like, no, just one step at a time, start small. But I
Mhm.
would say start with a phone wallet. So on your phone, if you've got an Android phone, go to Samurai Wallet. And if you've got an iPhone, look at Blue Wallet. So I would say those are some good suggestions. And just start by withdrawing, say, $50, $100 from your exchange or brokerage service or whatever. Start with that. And then once you get more comfortable, and once the value, your value starts rising in terms of Bitcoin terms, let's say over a couple $1,000s, well, then you want to start looking at getting a hardware wallet. And then, okay, now you might look at a cold card, let's say a coinkite.com, that kind of thing,
Mhm.
or Ledger or Trezor and that kind of thing. And then after that, you might want to start learning, okay, how do I run it with my own Bitcoin node, and some of those elements of it. And then as you get to higher values, well, then, okay, now you've got to start thinking about multi-signature. And
Yeah.
so what I would suggest, kind of as we speak today, January 2021, if you are a beginner or an intermediate level Bitcoin user in terms of your technical ability, I would suggest you look for one of the guided service providers for multi-signature. So this is like my podcast sponsor is Unchained Capital, or another option is Casa. So they're probably the two big options in terms of guided, helping you do it easy with multi-signature.
But
And then if
how much do I need to have before I need to start worrying about something like that? I mean, you mentioned a couple $1,000s in a phone wallet, in a soft like a hot wallet. So at what level do I want to start worrying about like solutions like that?
Yeah, that's a hard question. I think it's one of those like how long is a piece of string questions.
Yeah.
I think
So I think it really comes down to the person's like own, I mean, they have to decide what their own risk tolerance is. So like if I keep it on the exchange, then I don't have to worry about the security, but I have to worry about them getting them watching about their security, right? If they get hacked or the government seizes them or freezes them or they lock me out for whatever reason. So I have to worry about that. But if I take it now, I have to worry about security, right? So like there's like trade-offs with each one. And I
certainly.
guess different exchanges have different risk profiles as well. Um,
Right. Yeah. Yeah. So I would say you've just got to start. And like we in Bitcoin, we very much encourage self custody, but it's a learning journey. And I understand it's at the start, it can be very daunting. So I guess
yeah.
high level, if I had to give some guidance, I would say you you want to just take incremental steps. And so going from hardware wallet to thinking about, okay, do I need to start thinking about multi-signature? If I had to just kind of pick a number out of the air, I would say maybe six figures. Once you're getting over six figures worth of Bitcoin, you
Mhm.
probably want to start thinking about multi-signature. And then here's the factor, right? Because with Bitcoin, it is extremely volatile, as I'm sure you and the listeners know. It can, in the space of a few months, it can go 10x, and that's not like that has happened.
Mhm.
So let's say you had a Bitcoin stack of 100,000 or 200,000 in the space of a few months during a bull run. That could be a million, 2 million, or more. And so you've really got to start thinking about multi-signature once you get to those kinds of levels. And so that's where it's worth thinking about. So it's a journey, and you've got to learn about backups and
Yeah.
those aspects of it also to make sure. And then you've got to there's a pathway, but you have to think about things like backups. You have to think about things like inheritance. If you were to pass, how would your heirs or your family get the coins?
Mhm.
So that's why I would say for beginner and intermediate level, you want to look at using a guided solution. And for advanced level, you can do like a DIY multisig, like with your own using, Spectre Wallet and some of these solutions, or Electrum, or
So when
so
you
on.
say when
I'd
you when
probably
you're
look at
breaking those
Spectre.
two down, you're not talking about how much money you have. You're talking about what your technical ability is. So if you feel
Yes.
more technically advanced, you might want to set it up on your own. But if you're not as technically advanced, then you want a hosted or guided service.
Exactly. Yeah. And so the way I would see it is, if I look at kind of the market and the current solutions, that's based on, the current level of support, the current level of ease of use, the current software, the hardware that works with it. I would say for now, beginner and intermediate level in a technical ability should be, you probably are better off with a guided provider. And then, yeah, so that can help you, because if you start using multi-signature, it's like, those nuclear codes, you need 2 of 2 or whatever. So in Bitcoin, the typical ones that, an individual like you or me might be using, you might have a 2 of 3 setup, or you might have a 3 of 5 setup. So you might have, two, basically 3 hardware wallets, and you need 2 of those to spend. And so the idea is that you would keep those in different locations. So you might have, say, 1 hardware wallet at home and 1 in a safety deposit box somewhere, or a bank vault or something like that. And then in that example, let's say you went with Unchained Capital, then Unchained Capital would hold the 3rd key in that scenario. And then so you could either sign it purely on your own, or you could sign 1 key and you could ask that service provider to do the 3rd, that additional signature for you.
It
Now
seems
they may
like though,
charge you
like
fees
I
for
mean,
that.
if I have enough problems keeping track of 1 key, now I got to keep track of 3 keys. So does that? I mean, does that just make it harder?
It does, but it also provides you so much more security. It means you're so much less likely to get hacked. You're so much less likely to be stolen from, because now, even if an armed robber turns up to your house, you literally cannot spend from the setup that you've got. They would have to take you to the bank vault or to the safety deposit box.
Right.
And it just raises the level in terms of who could easily and feasibly attack you. Now, there's trade-offs with all of this stuff, right? Because if you use one of the guided service providers, you have to give up some info in terms of privacy. And so, that's something you have to think about. You might think, well, you know what, if I'm relatively less well known, maybe I would get away with just using single signature, using my own setup. Whereas, let's say if you're a public influencer with a name and so on, maybe for that kind of person, you really should be looking at multi-signature, because it just gives you such an increased level of security. Now, the good news here ultimately, though, is that Bitcoin gives people choices, and it makes it so that you have this incredibly asymmetric defensive technology, because it's like relatively a small cost for you, but it makes it a very, very high cost for the attacker. And so that is the overall good news here, that you can do this. It just takes a little bit of work and research and personal responsibility, but I think at the end of the day, it's worth it.
Yeah, I mean, and that brings us back to where we started, right? So stop being lazy, invest a little bit of your time into improving your life, and it makes a big difference. Yeah, I'm going down that path on my own. I've downloaded Spectre, and I'm trying to set up the multi-sigs, and it's a little overwhelming. I'm not going to lie. And I started an internet business in 2001. I've been online ever since. I'm pretty technically savvy. I consider myself to be pretty technically savvy, and it's still a good amount of work. So for those types of deals, then I guess we could maybe plug your other side, but you actually help people do that. Is that right?
Yes, so ministryofnerds.com.au is the website for that. So Katan and I, we just make free guides for people to learn how to self-custody. So, and we offer just kind of consulting for people who want to do a call with us, and we'll help talk them through that if they want to try to do it in a more self-sovereign way. So that's just one of the things we offer, and just like other guides and things like that.
Yeah. So is the security flaw in the device itself? So if I use a hardware wallet, whether that's Trezor or Ledger, well, I don't know. I don't even know how to ask this question. I mean, I guess there's just so many security holes that we don't know. So instead of trusting one device, if we split it up, then we're basically splitting up our risk.
Exactly, that's right. And so probably the relevant interviews are some of the ones I've done with Michael Flaxman on my show. But essentially, that's the point he's making, is that theoretically, unless you kind of go to all of these additional steps, it's theoretically possible that the hardware manufacturer was malicious, or that there was some kind of supply chain attack, or let's say the hardware manufacturer, now I don't think Trezor or Ledger would do this, but hypothetically, and you want to protect against that risk, they might have done kind of like a malicious setup, and such that you think you are generating your own keys, but in reality they've got them all, or they've got like a pre-generated set of keys, and you think, oh yeah, let me store all my bitcoins on this, and then like 10 years down, 5 years down the line, they just pull the rug and do what's called a retirement attack, or like the long con, if you will. Whereas if you use multi-signature, it just raises the level for them in terms of anyone being able to do that attack on you, because now they would have to compromise not just one of your devices, but 2 of your devices or 3 of your devices. And so it just takes it to that next level in terms of security.
Yeah. Now let's talk. So we talked about the hardware wallets, which protect your keys. Let's talk about the nodes now. So the nodes are really what, I guess that's like the next level that you'd want to go to. Explain what the nodes are and how they work.
Exactly. So a Bitcoin node, the simple way to think of it, it's like a fake Bitcoin detector, right? So if you used, if we were trading gold and you really wanted to check it, you would use that, that machine that checks if it's really gold or if it's not just like tungsten on the on the inside.
Mm-hmm.
Now, a Bitcoin node is a way that you can interact with the Bitcoin network. And so the way it typically works is any wallet that you use has to be connected to a Bitcoin node. So think of it like, if you're not using your own Bitcoin node, you're just pushing off that node, on running the node onto somebody else. So if you use Trezor or Ledger, just on the default settings, it's just using Trezor's node or Ledger's node. Where if you learn how to set it up for yourself, and there are probably a few different ways that you can do this, you can achieve more privacy, more functionality, and more trust minimized, because now you have your own source of truth. You are not pushing off that trust onto somebody else like Trezor or Ledger or your exchange. Now, so that's kind of what we talk about. This is the idea of holding your own Bitcoin keys and then running your own node. So people also summarize this as not your node, not your rules. So historically, there have been forks and other events where if you weren't running your own Bitcoin node, you weren't as able to ensure that you were on the correct chain and you were, running the rule set that you agreed with. I can talk you through some of the main ways that people run nodes, if you like.
Sure.
Yep. So I would say there's probably three main ways. So one is to just run a Bitcoin node on your existing computer. And there are little trade-offs you can do to make that easier, like pruning the hard drive down. So as an example, you can run Bitcoin Core on your laptop or your desktop and run Spectre Wallet with that, Spectre Desktop with that. And you can just periodically sync it up when you need to do a transaction. So the blockchain is like 360 gigs or whatever. But you can prune that down to like the last 5 gigs or something like that. And you can just, when you do a transaction, just periodically catch up those last few gigs. That's one way to do it. Another way is to do an always on device. So this is where people might use like either a box or they might use like a Raspberry Pi. So some of the well-known Raspberry Pi full nodes are things like Umbrel, MyNode, Ronin Dojo, Raspberry Blitz, Start9 Labs have this one called Embassy. What else? There's one called Noddle. So these are some of the full node, plug and play boxes, or you can build it as well. And then I guess the other third way is if you're using more like a VPS, a virtual private server, and people use this to do like a BTC Pay and stuff like that. But I would say for most people, you're probably looking at either option 1 or option 2, which means use your existing laptop and just do it like on the laptop you already have. Or option 2 is do the whole Raspberry Pi setup and connect your Spectre wallet to the full node on that Raspberry Pi. Make sense?
Yep. I think that's the easiest way for most people, especially as you said, with the technical thing. You can just buy a device and you can literally just plug it into your internet and kind of be done with it.
Exactly.
That's what I've done, and it worked pretty well. So
yeah, exactly. And so the difficult thing is, people say, oh, why don't you just do it? Like it's all free, but sometimes it's like, it's about configuring it and making it all work in a way that's nice and slick. And so I think probably one of the leaders in that is Umbrel. So, getumbrel.com, they kind of walk you through how to do it, and they tell you how to connect your, on your laptop, you might run Spectre Wallet or Spectre Desktop and connect that through to the Raspberry Pi. And then you have your own source of truth.
Now, are you okay running that on your normal, the Spectre desktop on your normal laptop or desktop, or do you run like a special device for that?
Okay, so this is another kind of rabbit hole, but basically, if you were more paranoid, then yeah, you should run it on like a dedicated device. But look, in practice, most people aren't going to buy another whole laptop just to do Spectre desktop on it, or just to do their Bitcoin things on it. So look, in practice, look, I think it's because it's like a trade-off of like ease of use versus like security. And so for most people, look, you're better off just using the computer, use the laptop or the computer that you already have. And remember, at least the private keys aren't being stored on there.
Mm-hmm.
So the private key lives in your hardware device,
Right.
like your Trezor or your cold card or so on.
Right. Okay. So it doesn't really matter as much. Maybe it's a little bit more secure if you have it on a dedicated laptop, but it's not really necessary.
Yeah, that's how I would say it. Because look, in practice, you got to be reasonable for for most people. Like they're not just going to go buy another whole laptop and do another whole thing just for this, right?
Yeah. Yeah. Well, a laptop's pretty cheap, right? I mean, a laptop's $300, so it might not be the worst investment in the world. All of this is, it's extra work, it's extra time, it's extra security. It's probably not the best setup if you want to trade with a whole bunch of other altcoins. This is really for the hodlers, right? This is if you want to just kind of put it there, kind of set it and forget it. I'd look at it kind of like, money in a safety deposit box. It's like you got to go to the bank and it's pretty difficult to do it. Then you can have like a hardware wallet on, where it's like your billfold. You walk around with a little bit of money. If you lose it, you lose it, not the end of the world. So it's trading convenience for safety, I guess.
Exactly right. And so with most things, it's, if you make them more convenient, they are less secure. That's just the sad reality of it. But there are, people and projects working on ways to try and make it easier. And I think Spectre Wallet is probably one of the good examples in the open source software world of that.
Yeah. It's pretty cool. I've enjoyed working with it so far. Now, running the node also has additional benefits, I think, at least for a public good, right? I mean, then we're running additional nodes, right? We're running software, so we're actually helping support the security of the network that way.
Yeah, so I would say it's kind of the main benefit is for you, right? Think of it, it's kind of like ultimately it's a selfish act, but in some way you are sort of defending the rule set of the network, because you're saying these are the rules I have chosen, and if somebody else were to try to change the network, well, you running your node kind of helps say, no, that's an invalid transaction. Let's say you were to try and receive Bitcoins from someone who was trying to maliciously change the network. If you're doing that with your own Bitcoin node, in some sense, you're helping defend the rule set. It's a bit of a meta kind of concept, but it's like this idea of, what's good for the individual and like what's good for the overall system in making it more resilient, more robust, more hard to shut down, and arguably helps kind of the overall system in some kind of loose sensor resistant way. And I guess you could also think of it kind of like you're seeding a file. You're helping seed that file to other people in a loose way.
Okay. So then to recap it then, so basically we buy it on the exchange or wherever you buy it, pull a little bit onto a soft wallet, a hot wallet on your phone, an app on your phone, a little bit. The next step is then to get a hardware wallet, and then eventually try to get a node that you can process your own transactions, and then move to a multi-sig device.
Yes,
that kind of covers it.
Yeah, that's it.
Yeah. All right. Well, that covers it. I know you have a lot of help on that. There's plenty of other videos out there that explain it as well. Does that kind of wrap it up? I mean, if people figure that out, that's what they need to know. It's not that difficult.
Yeah, and I think ultimately it just takes a bit of research and a bit of time, but you can sort it out if you are motivated. And I think what happens to a lot of people when they start reading and learning about it is it lights this fire in their mind, and they're like, wow, I need to learn more about this. I want to read books, and I want to listen to podcasts, and I want to listen to interviews and learn more about it. So, but look, fundamentally, you don't have to go all the way. You just have to start and take some steps. And I would say for most people, once they get to kind of having a hardware wallet, then that's already a pretty good level. And then once you're learning to run your own Bitcoin node, now you're kind of being more fully self-sovereign. So that's great.
Yeah, that's a great point that you just brought up. And I think that's that, don't feel like you have to do all these things, because you obviously don't have to. And you definitely don't want to do them if it's over your technical ability. So you could
Exactly.
be jeopardizing yourself by trying to get safer, but actually put yourself in more danger at the same time. So definitely don't want to go above your technical difficulty. Well, that's good stuff. I appreciate you sharing that with the audience. Like I said, I've been getting so many questions, and I don't typically dig into that kind of stuff. So it's great, great to be able to have that to share. For people that want to learn more about this kind of stuff, why don't you shout out some places they can follow you or get more info?
Yeah, sure. So you can find me in your podcatcher applications, Stephan Livera Podcast, stephanlivera.com. And then our website, ministryofnodes.com.au, is where we offer guides and consulting. So people can book on with us and we can help you out. Currently, we actually just offer that on a pay what you think it was worth basis. So people do a call with us, either me or with Katan, and basically they just pay whatever they think it was worth at the end of the call. That's all we kind of, it's like just our way of trying to help the community and help people learn how to take their financial sovereignty into their own hands.
That's awesome. That's awesome. What a good service. Well, Stephan, thanks so much. I appreciate you coming on and talking about that for us today.
Thanks very much, Mark. It was a pleasure.
All right, cool.